I believe the management at Magma is with us, Mr. Sanjay, Vice Chairman and MD at Magma Fincorp. So you've clocked in a robust profit growth of 64%, while the NII was just up 13%. What was the cross-selling number, because of which this is looking a good 60% higher PAT number?
So this is, in line with the narrative that we are given right at the start of the year, that the asset quality is expected to improve very significantly owing to the measures undertaken in the last 2-3 years. So if you see that our GNPA and NNPA have fallen very significantly from around 9% to 6%, and the NNPA has fallen to 4%. So with that, and still our provisioning coverage ratio is highest in the industry at about 38%. So as a result of that, in the third quarter, our net credit loss, NCL, is down to 1.3% from over 2% in the previous quarter. And this was the guidance that we had given, that in the second half of the year, we expect the NCL to be less than 1.5. So this is one big reason as to why the profits are higher. And I expect this trend to continue, because even the recent origination of the new loans that we are giving, the quality is significantly superior to the old portfolio. Secondly, NIMs also have held up despite the increase in the cost of funds in the third quarter owing to the ILFS-led liquidity squeeze. And while our cost of funds went up, still our net interest margins are kept at more than 8%. So this has also boosted the bottom line.
Mr. Chamria, hi there, good afternoon. Taking a look at your asset quality, we've seen your gross NPAs come down quite significantly to 6.3 versus 9.5%. Net NPAs as well has stabilized to 4 versus 4.4%. So major improvement. What has led to this? And do you think that, this sort of an asset quality trend will continue? What is the NPA trend that you are seeing across segments? Can you break it down for us?
Yeah, sure. Thanks. So there have been two reasons, as I mentioned, that one, the quality of the new book, and this is something that we have been talking pretty consistently over the last 10-12 quarters, is very, very high, and this we measure by way of early warning indicators and composite portfolio monitoring indicators. So where we look at 0+ and 60+ on a gap of 3 months to 6 months to 12 months and 18 months. And there we are seeing that there is a consistent improvement over quarter on quarter. And this has resulted in the portfolio staying in the 0 to 60 rather than going into even 60+, whereas NPAs are recognized at 90+. Second reason which has contributed, as you can see, that there is a significant reduction in the gross NPA, because there is a lot of recoveries which are happening from the accounts which had gone into NPA earlier in the past. And as a result of that, there is a contraction in the GNPA amount. We have also done during the quarter a cleanup. So a lot of NPAs which were there in the books and were fully provided for. So we have actually done a write-off as well. So therefore now the NPA book looks much trimmer and cleaner, and the ratios look much better. And the reason why I feel optimistic that going into the future we should see the trend continuing, and our endeavor is that by March we should try and bring it below 3.5 from 4% that it is right now, which is the net NPA, and next year we would want to bring it below 3%. So therefore there is a lot of tailwind that we hope to get from the asset quality story in terms of the net credit loss in the P&L and the NNPA to net worth, or NNPA to the AUM as a percentage.
Right. When we talk about the liquidity situation, can you just talk about that overall for the industry? What is the sense that you get? Do you believe that, liquidity situation is looking in decent after the October issues?
So actually the liquidity situation as compared to October has certainly eased up. There are no two doubts about that. And the business has started. However, it is still not normal in two ways. One, the cost of funds, while it had gone up to about 100 to 150 basis point for a similar tenure instrument, has come up, but still it is about 50 to 75 basis point higher than what it was pre-October. The second impact is that in terms of new limits from the banking system, whether by way of working capital limits or by way of term loans, are still very difficult to come by because of most of the banks have reached their sectoral caps in terms of exposure to the NBFCs and HFCs, and therefore they find it difficult until there is a growth of the deposits and the overall denominator of the loan book. And secondly, banks are also still apprehensive whether there would be some kind of a liquidity squeeze felt by any of the companies. So they want to see how in the month of February, the next set of maturities that will fall due, the companies are able to honor. So my own guess is that the liquidity scenario is going to improve probably after Q4, in Q1 of next year, and not this quarter.
All right, many thanks for taking time and joining in to give us a sense as to how the quarter has shaped up for Magma as well as your growth outlook. And remember, there has been a strong disbursement growth on a sequential basis. You have seen the asset quality as well, which has improved quite significantly.